Ladies and gentlemen of the crypto space, we're live on a Friday, October 3rd at 11:33 a.m. And the global money system, not the currency system, says it's time. Now, there's three particular data sets that I look at to tell me where we are. And I'm a reductionist, meaning there's technically a plethora of data sets to look at. You can get granular with this shit, but I don't do that. I don't have time. I don't have too much interest. So I look at three particular data sets that give me the highest level potential capacity for me to understand where the hell we are and where the heck we're heading. And this is not just based on like previous correlations, past correlations, like if bonds are crashing, the stock market's ripping, or risk off in the stock market into the bond market, which is a traditional relationship correlation or inverse correlation. Stocks go down, bonds go up. Um, so that's only part of the equation. Also, it's the mechanics of how and why it makes sense that when these scenarios that I look for occur again in the future, or frankly, right now for that matter, it's telling us what the global financial system is doing. And it's not dependent on whether the previous correlation is becoming an inverse correlation or the system is flipping. There is no potential for it to flip in this particular inspection because this is how money works. I said money, not currency. All right, so that's the move indicator. It's what I've been talking about for the last 3 years since 2022, and we've discussed on this stream since at least 22. Got to be earlier. So I've told folks how to understand this move indicator. Said it very simply. Just think of Ave and the health factor. And if you don't know what Ave is and you don't know what the health factor is, you're going to have trouble understanding this move indicator. And you're going to have trouble, frankly, understanding the concept of credit, the concept of collateral, the concept of what the hell is going on in crypto because Ave is basically the staple, the backbone, a base layer infrastructure in this cryptocurrency space. And we've had years to play around with it. I mean, the looping that we did, which is basically a cash and carry type trade or leverage thereof, back in 2021 was wild. And Ave's been doing what it has done since. So you got to understand that. You got to understand what Ave does. You got to understand how it works. You got to understand what collateralization means, over collateralization, health factor where you risk liquidation. Got to understand these things in order to understand what this indicator says. And what this indicator says is going to tell us, or actually does tell us, what the hell's going on in the global financials. And that tells us whether your cryptocurrency is going to go fucking up or down. Okay, that's why. That's why we look at this data. Because I simply want to know whether the shit that I own is going to go up or down. Highest level inspection, this goes down, crypto goes up. It's you should know why. Because why tells us what products, what fintech products are meaningful. That's the point. That's why it's all related. What goes up? Why is it going to go up? When this goes down, when the move indicator goes down, why is stuff in crypto going up? Maybe because it's all tightly related in terms of functionality. Okay, we'll start over with Aave. Aave health factor, you got a health factor of 5, and your collateral is Bitcoin. Bitcoin doubles in price. Your health factor all of a sudden goes to 7, 8. What are you going to do? All of a sudden, you got 7, 8 on the health factor. All right, borrow some more money. That is equivalent to this indicator going down. When this indicator goes down, the global Aave health factor goes up. And there's a difference. You're only talking about, well, many billions on Aave, however many billions it is right about now. Is it 100 billion? Yeah. I don't know. They're starting to talk in terms of trillions. I really like the talking points that Aave is coming up with lately. But the global system is in trillions. many more trillions than most people think. Everyone looks at this stupid M2, M1, M0, and they don't understand the Eurodollar system and how deep that is. And it's something like $300 trillion, according to Mike Howell's talking points that I vaguely regurgitate. I wonder what he would say. How deep is the Eurodollar market right now? And he would go back to capacity of the system to refinance debt because that's how he thinks. He thinks a little differently than I, and that's okay. But I appreciate his the way he thinks and has given me a great deal of clarity and my understanding of what's important to me to understand how the system works. All right, so the collateral goes up in price and the volatility of that collateral collapses. So you're sitting at an 8 and it's nice and comfy at an 8, you borrow. When this indicator goes down, the same thing happens in global financials and the system floods with currency, borrowed money. Suave isn't totally the story because the Eurodollar market doesn't lend existing currency units. What it does is it prints liabilities. So when a bank, this is double entry accounting 101, when a bank owns assets, a balanced set of books has liabilities that match assets. There's two columns in double entry accounting, assets and liabilities. So guess what? There's global rules. Basel 45001, where a bank's balance sheet must balance assets and liabilities. So if a bank has been buying assets, let's say since 2020, and they're sitting on a whole shitload of assets, maybe they have unbalanced books for whatever reason, they got to add liabilities. So how does a bank add a liability to balance its assets? So the bank offers a product. It offers me a line of credit. I and that line of credit is $20,000. That's a bank liability. So the bank, to balance its books, sells credit products. And now I'm given an account with $20,000 of credit, uh, is a liability. That goes in their liability side of their ledger. So they just balance their books a little bit by selling me a $20,000 line of credit. Okay, so that those dollars were printed out of thin air. Those dollars are liabilities. Those dollars are currency, and they're required to be created by the bank in order to meet regulatory compliance to have properly balanced double entry accounting books. So that's the way the global monetary system works to the tune of trillions of dollars. The point of this indicator that's most exciting is the timeline. Folks are like, oh, the bull market's almost over. Ladies and gentlemen, you have waited through the longest period of global collateral, global money volatility in the history of this indicator. Back in 2008, which started really in late 2000, summer 2007, July 2007, my framework, I would have had a capacity to navigate 2007 probably reasonably well because all of a sudden you got a spike like this coming off the bottom in a week. Jeepers. So 2007, everything's starting to fall apart. You don't see a spike like that. That's potential directionality reversal. All of a sudden, you have a higher high, and this is a structural change right here. And then you breach the moving average. Psh, it was off to the races back in 2007, leading into 2008. But if you look at the duration here was, let's say, from breach to the first close, like 987 days. Almost through going on 3 years. Over here, from breach to fall through this 200 MA, not even like the 100 or a lower time frame moving average. We're talking the 200 is 1,365 days. This is the longest time of elevated bond volatility in the history of this indicator, which dates back to dot-com bust, 2002 more or less, well, 2003, the end of 2002, which is where, guess what? .com finally stabilized. And look what the mark, look what this chart was doing. Look what this indicator was doing back after 2002. So everything started falling apart in 2000. And then 2001, 2002, things started to finally stabilize in 2003. There's your bubble. And the bubble lasted till 2007. And guess what? There's your indicator, 2003, and then your breach in 2007. So this indicator holds this concept of global liquidity and what it does, the implications of it, and how it's performing and how it's, you know, moving. This is an entity, this global liquidity. And it tells us something significant about how global financials are working. So we are coming off the largest period of global volatility in modern history, 1,365 days. And folks are out there talking about the bull market topping. And I'm out there telling you nothing has happened yet. Nothing. This was literally 2 weeks ago, 3 weeks ago, give or take. We finally breached that 200 SMA to the downside on the weekly. This is a period of uncertainty. This is a period where you don't have significant increase in global currency supply. You have circulation, you have velocity, you have churn of global currency supply, but you don't have the banks rebalancing their books. You don't have the banks saying, guys, bankers, get out there. You got to sell these credit products right now. Interest rates are rolling over. We need to balance our books. Go out there and sell 100 billion. Go out there, sell a trillion. Go out there and sell $5 trillion worth of credit products across, European Union, Asia, and the Americas. You don't do that in the red box because you have increased volatility and you don't know if maybe there's going to be a spike. Maybe all of a sudden that bond you bought is going to be worth less and now it's can collateralize less debt and you shouldn't have issued 20 grand, you should have issued 10 grand in liabilities and you have potentially unbalanced books. But when this indicator rolls over, the banks are like, all right, we got collateral, we got assets. The assets are decreasing in volatility, and the trend continues until capitulation. Volatility has a way of having momentum, and this will collapse. This trend will collapse until it blows up, and you have your spikes off the bottom, and that's your reversal. That's your capitulation. Same thing happens in equity markets and crypto markets. It's just the way these data sets work. But the banks are basically starting to get hungry, either because potential customers are coming to them with collateral, or they have unbalanced books because they've already acquired collateral and they need to issue liabilities to balance things out. We're on the threshold of the global currency supply expanding for the first time, I would argue, since March of 2020. You understand? This is the last time, March of 2020 was the last time this indicator was decreasing in volatility to the downside. Went up, and yeah, look, we had this decrease in volatility from the top to where we are now, and the spike was almost up to 200, and that was Bitcoin repricing, and the combination of the big combination of the Bitcoin treasury vehicles and all of them, and the reversal, the capitulation in global money volatility is what caused Bitcoin to bottom at 16, 17, or whatever it did back in 22. And that's was the first responder. That was the first mover. And that's what Bitcoin always does. It's always the first mover, sniff things out. But that's not new money. That's just the system circulating existing currency units. Because you're not printing currency units until things stabilize. That's certain in the way that the underwriters at the banks think. And that's where we are now. And that leads us, look at this indicator falling through the 200 SMA and the weekly. Finally, after 1,365 days, and then you look at total three and you're like, Oh, okay. Now I get it. Everything between November of 2021, which is literally the top, Fed started doing QT literally in December, and their balance sheet started contracting, and interest rates started going up in December of 2021. We all know that. And everything since then is getting back to where we were. It's getting back to what was taken out. It's getting back to neutral, parity, break even. At the top of the law, this is basically a cup and handle. I mean, you could call this the cup and handle, but it's like a cup and handle with a handle. Do I got to draw it? I could draw it. That's obviously a pretty decent cup and handle. And guess what? You say you got another handle. So maybe this was the handle, this whole damn thing. So this is just blatantly, obviously chart cup and handle. I don't like patterns. I don't like trend lines. I like levels and I like MAs. So we got a hell of a level right here with three interactions of resistance, and we're starting to punch through it. We're starting to punch through it with the global monetary system collapsing in volatility. It's time. The global monetary system is telling us it's time. And it's not time like, oh, I got to start investing now. You should have been doing this shit since 2022 when Bitcoin bottomed at 16, $17,000. But that's another story. The point is, it's time for what? It's time for the work you've put in over the last years to finally bear fruit, to finally do what you either were told by some KOL or some social media person, maybe me, is finally going to happen. And that's what's happening. But you know, if you waited all this time, waited years for this to finally happen, at least understand why it's happening. And that's what I try and do with my content. Tell people why what's going on is going on. Top it all off, the dollar is icing on the cake. You know, this this changes the whole equation. And this basically tells us whatever you thought a bull market is in crypto is you haven't seen it yet. That's what this chart tells us. This chart tells us basically emerging market cycles. That's what this chart is. Whether you're investing in India and Brazil, or capital's just literally pouring into the United States and everyone else is just screwed. This is the emerging market cycle chart, as I would say, at a very high level, in a high level way. And we're on the verge of a secular trend shift. Secular meaning long-term cycle. So we've had two crypto cycles, and this is a 6-month chart, by the way, so it's hard to draw on it. But here's your two crypto bull markets that most people maybe remember. There's 2016, 2016, 17, 2020, 21, 2018 and 19, things bled out. And then 22, 23, and 24, things bled out. So there was an extra year. Things have slowed down. Maybe that's Raoul's points and how the shorter term issuance on the yield curve has skewed the debt refinancing cycle. Um, and then things stabilized in Q4 of 2024, which is basically crypto fintech bottom. So you had Bitcoin bottom in 2022, and then crypto fintech bottom in Q4 2024. And now we're on the verge of this trend line. I hate trend lines. I told you guys I hate trend lines, but I got a trend line. I put a trend line on the chart. Don't judge me, because these previous crypto cycles were cycles. We're potentially talking about a secular trend shift where you have lower highs and lower lows, where they are systematically devaluing the dollar. Because and I always like to throw in there about the devaluing of the dollar. The amount of debt out there, dollar denominated, the dollar doesn't go down because of any reason other than policy. It can't go down because everyone out there is purchasing dollars wherever they could get them, or borrowing dollars wherever they could get them, because they owe dollars to someone else and they got to pay that interest. They got to pay at the end of the month. If India owes Brazil $1 billion at the end of the month, they're going to pay them $1 billion, which means they got to go out into the market and buy it or borrow it. All right. So guess what? When the move indicator rolls over and India owes Brazil $1 billion, what are they going to do? Are they going to buy it or are they going to borrow it slash print it? All right. The latter. They're going to print it. They're going to go to a Eurodollar bank. They're going to post some damn collateral. And they're going to borrow the $1 billion, which is basically the bank issuing $1 billion in liabilities, printing it out of thin air. All right. You understand how the collateral, the collateral volatility plays into the collateral pricing, plays into the currency, relative currency valuations? My hunch is we're on the verge of a secular trend shift, lower highs, lower lows on relative dollar valuation, and that is going to produce the start of what we've seen. What we've seen in crypto terms is very transitory bull markets where people are trying to figure out what the hell is going on. And what happened post 2020 is unlike anything in crypto's history. Because now we have fintech. Now we have $300 billion, actual dollars in what I define as an emerging market of emerging markets, which other people call crypto. But these are actually emerging markets because they have monetary velocity, they have credit systems, they have banking institutions, they have five businesses as I define them: foreign exchange, credit, derivatives, liability printing, and liquidity financing. The five crypto fintech businesses. Thus, these are emerging markets with actual businesses, which means there's places to invest because you can inspect balance sheets that make equity markets look pretty pathetic in comparison. So, as these markets reprice, traditional investors that look to equities for particular characteristics, maybe a pristine balance sheet, very little debt, no debt, they're going to be like, holy shit, look at these crypto businesses doing $1 billion a year in revenue with zero real estate, zero human resources, zero capex, zero opex, and zero DevOps, zero infrastructure costs, because it's all crowdsourced, executed on the blockchain. You understand? So these investors are going to find pristine businesses that can't go bankrupt because there's no such thing as a concept of bankruptcy, because there's no debt and there's no people. There's no liabilities that these businesses owe anything to. All they do is offer a fintech product and service and pay out revenues to people. We're on the verge of a paradigm shift, ladies and gentlemen. I stand by that. That's my opinion. And I don't think that's an exuberant opinion. I think that's a pretty obvious opinion. I think that's a pretty tame opinion. That's a pretty grounded opinion, in my opinion. Exuberant is like, you have no idea why the hell the price is going up, and it's just exuberance. It's bullshit. It's hype. It's some meme coin bullshit. The last thing I think of is anything in terms of that. So my expectation is the boringest shit, the shit that you understand the least, or not us, not our. We talk about this for a long time, but the shit that most people understand the least, businesses in crypto, not just the ticker and a price. Those are the things that are going to be the most interesting, because those are the things that are most likely going to reprice very nicely, not the whatever 50 bajillion% on a meme coin, but 100x, 1000x on the money while producing 10, 15, 20% returns after the appreciation. If you get 100x on the money and still cranking out 10, 15%, oh my God. Oh my God. That changes everything. That is insane. That is an insane thing to contemplate from a capital management standpoint. But that's what I speculate plays out. I speculate that the vast majority of crypto fintech that's systemic and meaningful infrastructure just gets repriced and is doing 100x in business, 100x in flows, 100x in transaction fees, 100x in credit. Business, these things are on the verge of just being consumed and expanding. You got the Secretary of the Treasury saying there's going to be $3 trillion in these markets and there's 300 billion. Get a 10x in the amount of currency in these markets. To come back, talk to someone who's an emerging market investor, and what would happen in Brazil if all of a sudden there was 10x the amount of currency in circulation? What would happen to the valuations of anything you could buy? And that's literally what we're discussing here: a 10x increase in currency supply. What's going to happen to the valuations of anything that could be bought? Absolutely insane what we're on the verge of. The curve breach it. The curve breached the Cherno SMA and the daily. The fact that we have to look at the daily drives me nuts. I hate looking at the daily, but we just breached 10 SMA. We start to push up. We get to 80. We get a nice breach. Get up to 86. This is going to be interesting. We haven't been through the 10 SMA since August, 2 months. Obviously, we got to get back to the 50. So the goal is to breach that 50. Herpes Cirques being what's interesting. Rejection, rejection, third interaction, lower highs, higher lows, 1, 2, 3. Got to get through that 50. And that's where I speculate we're heading. Because we breached the 10 SMA to the downside. We breached it less severely. We didn't breach the 10 SMA in the third attempt. We held a support and wick through it. That's constructive. That means it's getting better. The interactions to the downside. And now, and look, the interactions to the upside as well. We didn't even interact with the 50 SMA in the first attempt. And now we had a bit of wicks through. This is where we punch it because we have the confluence, the global macro confluence. You understand? We're gonna punch through. We're gonna find our first resistance. Here's our resistance lines. This is where things get sticky. 86, 111, 129. You got some resistance up at 158. You get past 158, and there you go. Now you go into 372. Maybe you get some intermittent stickiness from this, but this isn't much. This isn't much intermittent stickiness, whatever the hell that is, because it was only there for a short period of time. So I don't think investors are going to stack their entries or exits in this relatively transitory region of price action. More likely to stack it here at 372, which was a resistance, which was a rejection. That big base, this is a log chart, so that throws it off. That these two levels are 372 to $6. Talk about a rejection. But obviously, the 372 was ultimately rejected. We don't even have to talk about the 608 being rejected. The 372 was rejected because you have this level. Rejection, rejection. This is such a constructive chart. It's just, and this level right here of 86 cents is astounding. You have, I'll draw this. You have 86 cents resistance. This is how I think. Rejection. This entire bull market was just a rejection of the 86 level because this is resistance. Rejection, breakout, and failed breakout, failed breakout, failed breakout, failed breakout. We just have 1, 2, 3, 4, 5, 6 failed breakouts of 86 cents. That's the level of you need to understand curve from. All those failed breakouts of 86 cents. That is the level to beat. That's the boss. Once you beat the 86 cents, now you're in curve trying to figure out what the hell's going on. Everything above that back here, that was all just exuberance. and people just buying shit because it has a ticker and a price point, and they don't understand structurally significantly what it is from an infrastructure standpoint. And that's where we are now. It is a different world now as compared to 2021. Period. 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 Full stop. Mic drop. Okay. I went the curve because that's basically the infrastructure. And frankly, yield basis is on fire. That is just a sexy project, and it is hot, and there's a bit of exuberance around it, which is really interesting to see. I haven't seen any exuberance around Curve. Frankly, Curve post 2021 was just a complete disaster from a social media standpoint. And all of a sudden, yield basis is hot because the people buying things in crypto between 2022 and now have no memory. Either they're young and have no memory because they didn't do anything in 2020 and 2021 or earlier investing wise, or they just, I don't know, they're just not investing anymore. So it's a whole new set of investors that don't have the previous biases. And that's what I've been arguing for the last years. Everyone was so afraid. Everyone was so caught up in the stupid narratives, and they were so wrong. Everyone was wrong, and I was right. The mansions. You listen to him talk. That's just a smart guy. Smart guy making products, making money. He did the right things. I don't know. I don't want to rehash it entirely. I don't know whether he wanted to get liquidated or not. But what I do know, he needed to get rid of that supply. If if anyone, especially Michael, wanted Curve to become what it's going to become, he could not own that quantity of supply. Do you understand that, ladies and gentlemen? He needed to get rid of it. Okay? There's no way for Curve to reach where it's going to be, what its price is going to be, with that kind of concentration of ownership. That's too much risk. Those assets needed to be offloaded. So what better way to do it? You sell it and you capitalize? Look at the shit he got in for getting liquidated. Could you imagine if he sold it? What the headlines would have been, what the social media narratives would have been a disaster. So he did the only one of the two options and can't sell it. Got liquidated. He still got shit for that. He still got shit for that, but the assets needed to be offloaded. He needed to get rid of them. All right, fine. Maybe he could have donated them. Well, I don't know. I don't know. Whatever. I'm not here to rehash everything. I'm just excited. 78 cents. We breached the daily 10 SMA, and this is off to the races, in my opinion. Look forward to 86 cents region, and I look forward to seeing how the interactions hold up on the weekly because this is your final boss area, that 50 SMA, get up to the 111 level, and then you start having your interactions up to 158, and then you see the leap. Then you see the air gap, the void of there it goes. And then everyone's just in full on panic mode, and social media is like, holy shit, look what it's doing. Welcome to 2025. This is going to be a hell of an end of a year. Aerodrome quietly back to a buck 20. My goodness. My goodness. Oh my God. A zero. 7% on the day. This is such a lovely asset and a lovely business. Oh, this has got to be one of the most breathtaking businesses in all of crypto. And there's a couple. There's a couple of bridges that I follow. I don't follow all of them, but I do use a cross. I do use layer swap, and I use Stargate, and I certainly use cross curve. Brilliant. Four bridges. Cross curve. Basically, I primarily use cross curve and Stargate. But every once in a while, like for instance, yeah, there's no WBTC here. Let's see. But maybe. I wonder if that. Let me see. Arbitrum. Will it handle it? No, not USDC. I want. Yeah, look, there's no WBTC. Oh, there is? No, it won't take WBTC and Optimism. Let's see if they'll do WBTC and Optimism to mainnet. Mainnet. WBTC. Yeah, it won't even do that. So okay, so there's no WBTC support here. You go over to a cross, and a cross has a cross Stargate. I don't know if Layer Swap. They have this third party that facilitates like sub-second transactions. So literally, you're swapping WBTC from Optimism to mainnet in like 15 seconds. It's disgusting. And frankly, the speed of Crosscurve not using that infrastructure is astounding as well. Folks don't remember what it was like in 2021. This is a cute product, by the way. Garden Finance. If you ever want Bitcoin, like real Bitcoin, you use this. This is the coolest thing. It's like you pop in your Bitcoin address, you throw in a couple of whatever, and you get Bitcoin. Really cool. This is a lovely product. Shout out to Garden. Someone tag them or something and say I said hi because um I used this recently and I'm find it very impressive. I mean, where else could you do this? Where else can you turn USDC into actual Bitcoin? Pretty cool. Well, frankly, here, TBTC. So TPTC, you could do that as well. It's not instant. Last thing I remember, yeah, 3.5 hours. It takes 3.5 hours to unmint and get from TBTC to BTC. So that's a great product as well. Man, these I can't take the tech. I can't take the tech. Tech is too cool. It, it blows my mind. You don't understand when Phantom came out back in 20 whatever 21, and we had what multi-chain, cross-chain was impossible. You didn't know if you were getting your money. What we have today is there's no words for this infrastructure. What has occurred between now and 2021, I have no words. This stuff is gives me tingles. Your hair stands up. It's like, oh my god. Okay. Anyway, I'm excited. You guys could tell. It's only been years in the making. We've only been waiting years. You understand how I've been waiting years? It's gonna be so lovely. Okay, here we go. Commentary killers. Good morning. Much a pleasure. Much a pleasure. Tony, right. Boom. Sir Joe, President, accountant first, sir. Yes, sir. Good morning, IF. Exciting time, Chicago BTC. That's right. IF question for question time. How to get into seed rounds. Friends of friends, contacts. Not easy. Money makes money, connections, cronyism. It's what it is. Seems critical to sub 100Kers. Also, look good value right now. Value is, I mean, I'll be honest with you, maybe Velodrome. Um, that's at the lows, more or less. I mean, could have gone a little bit lower, but 48 is pretty much the lows. Velodrome's off everyone's radar because optimism is off everyone's radar. Meanwhile, the optimistic superchain is gotta be the most insane technological network of networks to come out of everything we saw in 2020 and 21. I mean, you if you tried to explain to someone in 2020, 21 what the hell optimism is today, nobody would believe you. Nobody would believe it could be done. Nobody would believe the cross chain and nobody would believe what Velodrome is. Nobody would believe these things. Velodrome is insane. You could exchange from any optimistic superchain to any optimistic superchain right in the Velodrome trading experience. I have USDC here. I want to buy Bitcoin on Metal. I want to buy Bitcoin on what have you. I want to buy Bitcoin on Fraxnet. Oh my God. Uh, there's no words for what Velodrome has built, what the drones have built. Only speculations about where they're heading. was pick a chain. And now I can't. And then you go over to like cow swap and you can do cross chain also. The only thing about this is where the hell is optimism? Cow swap. Someone tag cow swap and get them to figure out optimism. Don't miss an optimism. If I do any trading, I don't do trading. I do a liquidation because I capture revenue and I'm like converting it to dollars, stable coins. This is what I use. On Optimism, obviously, I can. That's about it. But on every other chain, this is what you use. You use CowSwap. Best thing there is. Um, Commentary. Hope that helps, IF. Dean, hello, my friend. Good morning, Rational Crew. What's doing nothing? Who's doing nothing? There's nothing to do. Sit back and be like, yep, told you so. Basically, where I'm at with everyone in real life. It's like, told you guys about this for years. What else was I supposed to do? My man. You've been around. You know the deal. You know the deal. I assure you the paradigm shift. Our future is digital, and now the internet has money, currency, fintech. The irony is, it's even bigger than that. It's not just the internet. It's because it's not just an internet. It's the, the these systems have characteristics of literally nation state economies. It's bigger than the internet. These are economies. It's a mind blowing thing to say. Peter P. Good morning. We'll have to add that to the bookmarks. Garden. Yeah, garden's pretty cool. Amongst everything, it's always something like, holy shit, that exists? Always something that blows my mind. Still, Yield Basis will be getting half those fees. Oh my God, Yield Basis is insane. Folks were so critical of the launch, and any BTC bought on Yield Basis must be bought using CRVUSD. And the only way to get CRVUSD is to buy it from Curve. Now, obviously, this is all done in aggregation and routing. So, for instance, if you go on CowSwap and you have USDC and you want, well, it's not going to show you the routing. I wish it would. And show you the routing. Who shows you the routing nowadays? Is there advanced display? I want to see the routing. Anywho, but if you could see the routing and it's going through yield basis, it's first going through Curve. So all these are going to be Curve transactions. I suspect CRVUSD volumes up and to the right, transaction fees up and to the right, and finally the Curve fees up and to the right. So you're absolutely right. Yes, indeedy. Good morning. Michael, good morning, Cap. Much a pleasure. Welcome, welcome. Peter P, ever try Everclear? They don't have WBTC optimism support either, but it works smooth and cheap. Let's take a peek for the fun of it. This guy, Backwater Bridge. Let's take a look at the UI. Intense. Cool. Explore. Okay. Added. Tell me, does it have Bitcoin? My God, no. Okay. Oh shit. Okay. I wonder if it's its own infrastructure or Bungie. It's like an aggregator. That's another one. Not as popular. Bungie Exchange. I will add this though to my bridging section. Everclear as well. Not that I need them. And now we're getting into time where we have just redundancy of infrastructure. I mean, my go-tos are going to remain Crosscurve. Crosscurve is just so cool. Just love this platform. And Stargate. What else do you need? What else? What else do you need? It's just wild. Chain abstraction, start swapping, and you get the same thing. It's pick a chain is more of an aggregator, and from an aggregator standpoint, you also got Rubik, old school. Oldie but a goodie. Any chain to any chain, any asset, it just works. They've been doing this for years, and it has some stuff that I'm like, it finds liquidity. Like, what's Liffy? What's Relay? Symbiosis, we know. Rango. I don't know half this shit. Fine. Source the liquidity. By all means, Rubik, you go out there and find the best price to go cross chain. Look at that. One chain LUSD. No one's swapping LUSD, but look, it has liquidity. It does. It's wild. The tech, I don't even, I can't. I can't. The tech is crazy. The tech is killing me. Yeah, Peter, all of cross curve goes through curve. Curve LPs. Cross curve is basically a cross chain bridge using curve infrastructure. Interesting, right? When zero giving us revenue back, I certainly would like that. I'm like Stargate. I heard we're getting that revenue because I had a fat stack that I didn't claim, and I want that. But all their recent headlines said we're going to get that, and I think they're going to probably do staking as well for ZRO, I guess. Rubik has Monero support. That's crazy, isn't it? Isn't that crazy? Wild. Monero support. It's like, and oh, I forgot one. Door swap. Uh, Fine, I'll throw another bridge in there. You know why I like Thor swap? Because I still have Cosmos exposure, so you can take your native Atom and go to Ethereum. And they do USDC. Ethereum USDC. How cool is that? How cool is that? Oh man, I can't. Absolutely wild. Wild, wild, wild. 123 on Bitcoin just casually as we're talking. Just like 5 inches from all-time high. And these were wicks. It's like, what? You're right here. You're one liquidation from all-time high. Like today, Friday, October 3rd, like boom, all-time high. Casually. What a day this is going to be. Oh, how interesting. I'll have to do some research on cross curve. Cross curve. It's a curve product. Well, it's a curve. It's like Curve saying, "Hey guys, go build this." It's a Curve endorsed product is probably the best way to describe it, which was what DeFi money was. I missed DeFi money. That was could have been great. I think it was better. I think it was better to figure out how to do something with just Curve, with just CRV-USD, because that's what DeFi money was to take CRV-USD and make it into this seamless cross chain. But the problem is, how do you bootstrap? You can. It's like you can't copy Bitcoin. You can't copy a network. You can't copy momentum. You can't copy interest and trust. So they got to work with what they got, and they're gonna. That's my 2 cents of why DeFi money didn't click. Casual all-time highs. That's right, Eric. High. Nothing ever. Nothing's even happened yet. We're gonna end on that note, ladies and gentlemen. Nothing has happened yet at all. Nothing. Literally nothing. So welcome to where everybody's on social media screaming top. Welcome to literally basically day zero. It's gonna get weird. Calm, cool, and collected while BCC rips higher. Look at that. 123.4. How all right, it's gonna be a lovely day. Enjoy, ladies and gentlemen. Thank you for joining me. Friday, October 3rd, 12:22 p.m. 229 people made it to the end of the stream and are now all that much more rational because of it. I wish you all a wonderful weekend. Stay calm, cool, and collected, as Peter so eloquently said. I wish you all a good one. I'll see you guys and gals again on Monday. Till then, peace.